Hello, welcome to another Hershey Financial Advisers economic update. So today we're going to be talking about Q2 of 2025. So as we sit here today, Q2 ended actually about a month and a half ago. There's a lot of data still coming in right now about Q2. So we wanted to wait a little bit to do this video and talk about Q2, where we're looking at for the rest of the year and ongoing, and where we see Q1 versus Q2 and the economy. So Q2 had a better GDP than was expected. It was 3%, consensus was 2.4, and compare that to the first quarter, that was negative 0.5%. So gross domestic product, GDP, is a measure of the overall activity in the economy, and it's the more broad sense U.S. economy, economic growth. So that passes through to jobs, that has to do with unemployment, and certainly overall economic growth and the growth of businesses and the opportunity. So we're going to dive into that a little bit and look at first quarter. Why was it 0.5%? Probably the uncertainty that was going on with businesses and individuals trying to figure out what these tariffs that Trump was talking about are going to look like. And so then in the beginning of Q2, when the tariffs were announced and then delayed, I think that gave people time to adjust. But at the same time, the economy during that period, we also had consensus building that the government was going to pass the new tax law, extension of the tax cuts, and that did happen. That gave a boost. Technology continues to be strong. And so we're looking at all these things together. And so the picture right now, as we're sitting here in the summer, is that Q1 was a little negative. The unemployment did continue to tick up, and the jobs continued to go down and be under a little bit of pressure. Going forward, the consensus is that'll get worse. And also, Michigan survey that looks at households and consumer sentiment is suggesting that people believe that's going to get significantly worse. We're not sure about that. We think there's an opportunity for it not to be as bad. Essentially, the tariffs are a consumption tax. So if you look at tariffs and say, well, if you compare that to a value-added tax like you have in Europe of 15 to 20%, even with tariffs where they seem like they're going to land in 10 to 20%, depending on the country, and then depending on the concentration, what gets covered, what doesn't get covered, I think that's translating to less than 5%, probably even 2 or 3% consumption tax. So it's still a tax, it still has a drag, it still makes goods and services more expensive. But at the end of the day, we translate the tax cuts in the United States on income and corporations and shifted that into a consumption tax. I think there's a workout period, but I think that going forward, unemployment will continue to drift upward. That's the consensus, and we think that's accurate. Inflation probably will drift upward as well, or level off, and then eventually continue to decline as these tariffs pass through and get implemented. So we are looking at right now, there is a good chance that that interest rates will get cut later on this year. They're already quite high, and there's an opportunity for them to go down, even if inflation is there, but just not as high. And so we think that's an opportunity. We also think it's an opportunity that stocks continue and bonds continue to do well. Not phenomenal, but right now we're looking at 4 or 5% of balanced portfolio, and I think that that continuing to the rest of the year is possible, certainly. There's always shocks, there's always things that go differently, but right now we're looking at it and saying second quarter versus first quarter, third quarter right now as we see it versus second quarter, things look like they're stabilizing. People are starting to get an idea of what tariffs might look like, and they're also looking at the tax law that was just passed and diving into that, and they're looking at the overall economy and starting to pick up a little bit more of an idea of where things are going to be. So if you have any questions about this, please reach out to us and ask. Thank you for letting us serve you. We're looking forward to continue to get these economic updates to you and videos to you to inform you and keep you in the loop. And we appreciate it, and we are doing our best to serve you the best we can. Thank you for tuning in to Hershey Financial Advisers Economic Update Q2 of 2025.